Hi guys, this is Anurag Sharma, and in this series of understanding of various functions performed by Reserve Bank of India, excuse me, today I'll be discussing with you the another most important function of Reserve Bank of India, that is monetary policy of India part 1. It is prepared by me Anurag Sharma, and let's discuss what is the meaning of monetary policy. Monetary policy, it's formulated and executed by Reserve Bank of India. I have told you this in my first lesson, and it regulates money supply in the economy. So it is very important, and one of the special responsibility of Reserve Bank of India is the execution of monetary policy. What is money, by the way? Money is nothing, it is currency plus credit creation by banks. Very important, that currency which is circulated, which you and I we are using, that currency and the credit creation by banks. So how money is deposited by public? Money is deposited by public in two forms: one in the form of deposit in cash, and one in the form of credit creation. So this is a brief idea that what money is and what is monetary policy. Now, what monetary policy helps to control? Extremely very special function of Reserve Bank of India, guys. So very carefully let's understand with that what monetary policy helps to control. Monetary policy helps to control, number one, most important, that is supply of money in the economy. That currency we are using, the supply, it's whether it needs to be expanded or contracted, that supply of money, it comes under the purview of monetary policy, number one. Then the second important thing which we help which is which RBI tries to control is cost of money. And cost of money is nothing but the rate of interest which which we pay for any credit facility we take from bank. So that is known as cost of money. For example, if you are taking a car loan of rupees say 5 lakh, and yeah, at the rate of 12% or 14% or 15, whatever the rate of interest, that rate of interest is nothing but the cost of money which you have borrowed from the financial institution or bank. So these two, one is supply of money and the other is cost of money, the important function. And the third important function is the availability of money for attainment of certain objectives. We are a developing economy, guys, and there are so many objectives which we need to attain, and for the attainment of those objectives, what we need money. So monetary policy also helps to control that availability of money for those particular objectives. So this is a brief idea that what monetary policy helps us to control. These are the various objectives of monetary policy, guys. I request you to note down note down each and every objective. That to regulate money supply in the economy, to attain price stability, to promote economic growth, to promote saving and investment, to control business cycles. I'll be discussing these all objectives with you one by one. So let's discuss what the first objective of monetary policy is: to regulate money supply in the economy. Now, monetary policy is framed to regulate the money supply in the economy, and I've discussed, what is the money supply. It is, the currency which we are using, and the credit creation by the banks or the public. So it is done by, and how it regulates the money supply. Its regulation is done by either by credit expansion or by credit contraction. What is credit expansion, guys? Self explanatory. When we give more and more loans, that term is known as credit expansion, and when we give less loan, then it is known as credit contraction. And credit expansion means when we are giving more and more loans, then that credit expansion leads to expansion in money supply. Of course, we are giving more loan to public, so they have more money, so there is more supply of money. So that credit expansion leads to expansion in money supply, and vice versa, that is credit contraction leads to contraction in money supply. When we'll give less loan, when we are giving less loans, of course public will not have enough money supply, so that will lead to contraction in money supply. Now, the main aim of the monetary policy of the Reserve Bank was to control the money supply in such a manner. Very important, guys, that we want to control, definitely, we want to control the supply of money, but in such a manner as to expand it to meet the needs of economic growth. Because we need money for economic growth, we need to spend more money for, because we are a developing economy. So we need to expand for economic growth, but at the same time we need to contract, because when the supply of money increases, inflation also increases. So the at the same time, to contract it, to curb inflation, and inflation is just simply when too much money attract too less goods. So that's how monetary policy regulates money supply in the economy. Now, to attain price stability, now we know that price level is affected by money supply. If we have more and more money, definitely prices will go up, and if we have less money, then so to attain that price stability, that monetary policy regulates money supply, and hence it also helps to control the price stability. To promote economic growth, very important, to make available necessary supply of money and credit for the economic growth of the country, because we need money for the economic growth, and we, as a developing economy, we need money for the economic growth of the country. So by the help of monetary policy, we try to promote economic growth. Now, to control business cycle, very important, guys, this is a typical control cycle. This above, that increasing trend is known as booming period, then we go down, it is known as recession, and this slump, which is also known as depression. And this cycle, we can say it is a repetitive cycle, because whenever there is prosperity, we will go to boom, from boom we will go to declining position, from declining we will go to recession, and from recession we will go to slump, which is also known as depression stage. Again, this phase is known as from slump to above. This stage is known as it is known as recovery growth, recovery curve, and recovery then again. So this is a repetitive cycle, and with the help of monetary policy, we control this business cycle, especially in two stages. One is in the boom stage, and one is in the slump stage. In boom stage, we contract money so that we can curb inflation, and in slump we try to increase the supply of money, so that there should be more and more credit facilities to curb this slump time. Now, to achieve stability in the external value of rupee, we know that Reserve Bank of India is also a foreign exchange manager, and if exchange rate fluctuates excessively, then RBI takes appropriate actions as and when required. And when it purchase or sale of foreign currency, whatever is required, RBI do that, and so that we can regulate demand and supply of foreign currency, and thereby maintaining the stability in the external value of rupee. There's this is one of the most we can say common topic for discussion nowadays, whenever there is a fluctuation of value of rupee against dollar or any other currency. Now, to manage aggregate demand, another objective of the Reserve Bank of India's monetary policy, to increase demand of goods and services, credit is expanded. Of course, when we'll give more and more credit, then it will increase the demand of goods and services, and by lowering down the interest rate, and vice versa. If we want to decrease demand, so what we will do, we will increase, we will contract the we will increase the interest rates. To promote export and substitute import, to promote export and substitute import, by providing concessional loans to export oriented and import substitution units, RBI helps to improve the position of the balance of payment. Balance of payment is another term which I'll be discussing with you people in following lessons. So that's all about the introductory process of, or introductory stage of, Reserve Bank of India's monetary policy. I hope you guys have enjoyed it, and guys, please give your valuable feedback and review. I say this thing again and again, that teaching is a two-way communication. So do not hesitate to give your blunt reviews and your feedback. This feedback will be very valuable for me for framing down my further chapters. So that's all about the introductory. With the second part of monetary policy, I'll be joining you guys soon. Till then, happy learning.